Oh, right. All right, guys, welcome to your weekly Multifamily Investment Club weekly update with Michael Young and myself. Just wanted to talk about what we've got going on. I'm here at a hotel in Park City, Hendry Hotel. It's pretty nice. And we're at an investor conference, or I am anyways, talking with some big time investors who have holdings in the billions and what they're seeing in the market, if they're still acquiring properties with these rising interest rates, and what they're doing to prepare for a recession or a pending recession. And so it's been a really interesting conference, but we'll get into that in a minute, Michael. We're finally getting painting going on Desert Peaks and making some progress in some other properties. So I wanted to talk about that first. You and I think the exciting thing is you and I talked about an income goal for Meadow Creek, Desert Peaks, and Meadow Creek. Lyndon pulled up some data that our highest collected gross income so far has been $158,000, and that's pretty exciting. So now we're trying to push towards the end of the year. We're thinking 165. That's a huge increase from where we started.
That would be 50,000 a month.
Yeah, 50,000 a month more than where we started. So that's huge. And that's in the middle of a kind of a slowdown in the economy. We've had a few evictions, a few people still trying to get rent relief for COVID, which it's just they're working the system, or they're trying. So I feel like our property managers are doing a great job. Ernesto's working his butt off in El Paso to get that occupancy up, returning units, and we have a goal there as well to get to a much higher number by the end of the year. And I think finally we're going to get that place painted, and it's going to get much better. So we're excited. I think the biggest thing though is that we finally closed the rest of Fairmount 5 yesterday. So that was really nice. So we got that portion that we didn't really want to have as part of the portfolio sold. And that was kind of a relieving text to get from Jason yesterday, to have that piece finally off our books.
It's been a long haul.
Yeah, I mean, we've been working on that deal since when? March?
I think so. It's been a while.
February. Could be February. So it's been a long haul. It's been a lot. Yeah. So anyways, we're getting a lot of questions from investors about the deals, how it's going, if we're seeing a pullback in rents, which we're not at all. So just to put that to bed, we're not seeing a pullback on rents at all. It's always a little bit slower when kids go back to school. People don't really want to move the month that they put kids back to school. So September's always a little bit rough, as is August. But leases are picking back up. And I think the nice thing is we're kind of out of that high turnover summer months. That time frame when we have a lot of vacancy, a lot of move outs. Now we're kind of more to a more manageable, normal amount of turnover, where we can not be really just overworking our property managers and having to turn over that many units. So Michael, any notable mentions or any thoughts on any of the properties that we've got before I go over my general update? By the way, I like your view.
No. Yeah, it's a beautiful. I'm not in the Bradenton deal in Florida. I'm not in the deal in Albuquerque, but I'm in, I believe, all the other deals, including ones we finished, just my own. And I'm really pleased with the way the direction's going with MFI as a group, with Pero as a group, our relationship, the structure. We're creating business plans. We're creating quarterly business plans for all the properties, so that there's no daylight between MFI and the managers. There's no daylight between myself and MFI, and that everything has got a tight cohesion to it. And it's really important that everybody knows the goals. We're going to be stabilized at Meadow Creek, and if people understand what that means, Sam can explain that a little bit more, but we'll be stabilized at Meadow Creek in probably about 6 months. We'll be stabilized at probably another 6 months to a year. F1, the same thing. So, you know, I just like the way the direction is going with the properties and the team. And that's all that I really care about, because when that happens, cash flow increases and the properties increase, and it works. It's just best for everybody.
Yeah, I really appreciate that, Michael. I think it's been a long haul. We took on a huge amount of properties very quickly. And then that's one thing I was talking about with this group here in Park City last night, is we grew really fast for such a small team. And we had to put into place different metrics or things that we measured with our property managers, but most importantly, accountability. And that accountability is really starting to work well and make things easier to project, easier to manage. So I'm with you on that. It's definitely getting better. You know, we've got Calvin full time. And one of my questions to the group, there's some big time operators at this convention, this meetup. And I said, you know, what do you guys do? How do you structure your management teams? And, you know, one group has their COO and he does everything. Another group, they don't have a COO, they have regionals. And they have kind of their main core ownership group that manages the regionals. And I've been debating on the best way for MFI to manage these deals. And I think the regional route is the route that I want to go, because I'm such a control freak. I want these properties when we buy them, when you and I decide on a business plan for Meadow Creek, I want it to be executed exactly the way we planned it.
Right.
Because there's a lot of research, there's a huge amount of running the numbers and you know, walking competitive properties, you know, comparable properties. So there's a huge amount that goes into that. And I think the struggle we've had is these property managers don't always have that same vision. And so getting a regional in place to ensure that business plan moves forward the way we designed it to be the most profitable and to have the least amount of risk and overhead is what we need to do. And so, you know, that brings up a really interesting story I heard last night. So there's a family office here in Utah, and they had to liquidate a $1 billion portfolio. Liquidate $1 billion with a multifamily, all here in Utah, 8,000 doors, because their CEO really decided to kind of go on vacation and stopped having accountability with his teams, stopped checking in on things, stopped looking at the numbers. And Michael, you and I are obsessed with the numbers. We look at them daily and weekly with the property managers. Daily, you and I talk. And so this son of the family was the CEO running everything. The parents and the older siblings all thought they were going to retire. And they got kind of out over their skis and ended up having to start to rebuild. So they liquidated that $1 billion portfolio, all, you know, 2, 3, 4, 5-year-old properties. And actually, one of my friends was able to buy one of those properties for 68 million, 60 something million a few years ago, and he's crushed it. And so it's interesting that they owned really good properties at a time where it was really hard to lose in a market in Utah that has had nothing but massive amount of gains, and they still lost.
Right.
Purely management. And so this gentleman I was talking to was one of the brothers who's less involved. His money's in the deal. He's not managing the deals. And, you know, through accountability, they're back on track. You know, that family now is holding that CEO absolutely accountable, but they lost hundreds of millions of dollars. And it's a really good example of what not to do. You know, and even in a good market, you can lose. And so that's why we've been pushing so hard. And I think we've bought a lot less properties than we could have. We could have gone to these family offices and raised tens of millions of dollars and bought all these different properties that were, you know, maybe a little bit less profitable than we like, but would have been good. But, you know, we made a firm decision to grow responsibly and to really focus on the systems this year. And so I'm really pleased with Lyndon and Calvin and our business coach and you and I, and of course the property managers that we have in place, getting on board with being okay with being held accountable. And we're going to keep pushing more and more on that as these systems get refined. And so it's been really great knowing that we're doing the right thing. And then last night, hearing a story of someone that lost billions, not billions, hundreds of millions out of their $1 billion portfolio, because they just didn't pay attention to the numbers. And so, Michael, I know you absolutely pay attention to numbers. Your good friend who has that family office, they're very, very good at running the numbers, looking at variances. Any thoughts there, though? After hearing a story of someone losing hundreds of millions of dollars in one of the best markets we've ever seen, what comes to your mind as systems and accountability that has helped us, kind of what you're saying, get that cohesion going?
It doesn't matter whether it's a business or a $1 billion portfolio. Any business, and this is really from Charlie Munger, which we can apply to apartment buildings, can go under just like that.
Yep. If
you bring up these old companies like Kodak, the video store,
Blockbuster.
Blockbuster, these were considered world-class. Meadow Creek, Desert Peak, the Fairmont portfolio. If we did not, you and I and Lyndon and the team, if we were not obsessive about follow-up and accountability, these properties would fail. I want to be crystal clear about that. Not passive income for us. It's passive income for the investors as part of the syndicate. They get their money every month, and God bless them, happy to do it. But for you and I, and you know me very, very well, this is not a passive thing. This is borders on obsession. So until these properties are stabilized, and even after they're stabilized, they have to be watched very closely. Now, they won't have to be watched as closely 2 or 3 years from now. They'll have to still be watched. But this is, again, the baby is learning how to walk. And then the baby learns how to ride a bike. And then the young person learns how to, go throughout life. That's what these properties are. We bring them up from the ground up. We restructure them, reposition them. It takes an incredible amount of work, takes an incredible amount of accountability and focus and hopefully the right judgment. However, that can stop at any time, and every single property is vulnerable. Every property. I don't care if it's the Empire State Building, I don't care if it's Trump Towers. Every property can go broke unless the team is on board with the right vision, is watching. That's it. People ask me, well, always what? I know exactly when rents will stop going. Now we can talk about that later in the call or another call, but right now rents are going to keep going up, at one man's opinion. But I also know the circumstances when rents will stop and will fall a little bit. That's a different circumstance in our economy. But what I'm saying is we can never, ever get complacent. That's the bottom line.
Yeah, that's huge. Complacency is what killed it. And so David or Stamian, you just jumped on, and I think a couple other people just jumped on. I'm at a conference in Park City and was meeting with a gentleman yesterday that is part of a family office. He actually married into family office. I had to take notes from his book and try to do the same. A multi-billion-dollar family office. And they had 8,000 doors here in Salt Lake. And the CEO, one of the sons, got complacent and tried to do too much with too little accountability, not looking closely at the numbers. And they had to liquidate $1 billion in holdings. All of their multifamily, 8,000 doors, they had to liquidate because they could no longer pay the bills. And they got loans that were way too aggressive. They had way too many employees. Anyways, they overexpensed and overtaxed these holdings, and lost hundreds of millions of dollars in one of the best economies we've ever seen, in one of the best markets, which is Salt Lake City that we have. And so it was really frustrating for him. And he was talking to me about needing some young blood. And so he was actually really interested in working with us, Michael, and saying, we need someone that has that accountability, that isn't part of the family, that treats this as a business, not their family's money that they can play with.
Right.
And so they're really interested actually in partnering with Multifamily Investment Club and you and I and Lyndon and buying assets together that can be managed in a way that's, here's the numbers, here's the goals, how do we get there, and how do we have accountability, rather than, well, lost a couple $100 million of my family's money, but I'm still the son in charge, and but you can't fire the son. It's you can, but interesting dynamics in the family office. And so and I think that's why people invest with us, Michael, is we're very conservative and obsessive with the numbers. And I know that's why this last family office offered to write a $10 million check to us for the San Antonio deal. And we're going to actually be pitching that San Antonio deal on next week's call. Michael, you and I will talk about that Monday morning. But we've got this deal in San Antonio that we're going to pitch to people and see what they think. We've got a group offering to write a $10 million check. We've got another group offering to write about an $8 million check for it. And we want to know what our partners here think about it. I think they're going to like it. But that's why people invest with groups like us, is the accountability and the accountability to the numbers and the business plan and executing. So that's all I have to say on that. But it was a really interesting learning experience last night, and hearing such a heartbreaking story of losing, let alone $1 million, but hundreds of millions of dollars of somebody's wealth. So we kind of already talked about Meadow Creek, Dallas. We're getting professional photos done there. The big thing we're working on right now, Michael, as we were not happy with the website. We were not happy with online marketing. And we're always, as you said a little bit earlier, obsessive about things. And so we're obsessing right now about the online image. How can we look like the best option in Garland, Texas, in North Dallas? And right now it's the website and the marketing. We have beautiful exterior painting done, interior upgrades are done, new pool furniture. So we're getting professional photos done, and going to have a brand new fresh looking website, as well as all of our online marketing. Same thing in Desert Peaks, it's being painted right now, redoing the website. Same thing with Terrace Hill. We've got different CapEx projects going on. We want to revamp the website and the online marketing and the photography. And so, anything we can do to boost rents and boost occupancy. And right now it's the curb appeal and it's the online presence. And so, we're always looking at that. And that's part of what my regionals do, or my asset managers do, is they look at that monthly. They look at the advertising monthly. They look at the website, the ads that the property manager's running. They weren't putting at Terrace Hill, Michael, I don't know if you can believe this, but they weren't even putting street signs out. And they said, oh, that's a good idea. I'm like, well, you're literally they're a block back from the busy street. But I said, guys, you're a block back from the busiest street in El Paso, Mesa Drive. And so they're going to be putting in the median signs that say apartments for rent. So there's always little things that we're tweaking. We're never satisfied. We're happy with our returns, but not satisfied with where we're at. Very happy for these properties, but never satisfied. So doing the same thing, Albuquerque, Florida. If you guys have specific questions, feel free to jump in or text or call me. But we're really trying to boost cash flow right now for either a refi or a sale in Florida, a refi or a sale in Albuquerque, and everything else. We're just pushing hard to be able to refi as soon as rates come back down a little bit. Michael, any thoughts there on any of those properties?
No, you said it the exact right way. We're always happy. Well, sometimes we're not happy with it, but we solve that.
Right now we're happy.
Yeah, we're happy. For today, we're happy, but we're never satisfied, and we won't be, because these properties will continue to grow in their rents, and until the economy, really crashes, which could threaten rents, a few years from now. We're going to squeeze every drop out of the juice.
Yeah, every improvement we can do, if I can quantify some type of return, I'm going to do that improvement. And so that's the goal right now. David, everyone else that's on the call, any questions for us? If you don't have any questions, you're welcome to stay muted. Distributions, we're just to rehash that, guys. We're doing that quarterly. So September, this month is the end of Q3. So we will receive all of the financials for September by October 15th. We'll then analyze those and audit those with our CFO from the 15th through really about the 20th to 25th, depending on how busy we are. And by November 1st, we'll have those distributions set and then sent out in the 1st of November. So just a reminder, that's how distributions are going now. We've grown big enough. Monthly distributions is way too much. And also we wanted consistency for you guys because these properties go up and down as we're remodeling and vacating units. We wanted a little bit more consistency, which we heard loud and clear from you guys, from our investors. So we've gone to quarterly distributions. Again, first week in November, November 1st is when we're sending that out. And then same thing follows for fourth quarter. So end of December is the end of the fourth quarter. By January 15th, we'll get those financials, analyze those, audit those with our CFO, who, by the way, has been fantastic at auditing and getting everything done. And then by February 1st, we'll have Q4 distributions sent out. Don't have any other questions. I'm going to head back to breakfast with my family here in Park City, maybe do a hike, and have a good weekend, guys.
Thanks, everybody.
Michael, as always, thank you.
Thanks, Sam. See you soon. Have fun.
Okay, see ya. Thank you.